recent Nifty crash that had happened over the last week, with the week ending around the 6th of September 2024. So we have seen Nifty falling substantially. There had been quite a concern about the US job data, and it is not limited to the Indian markets. We have seen US markets and even the European markets falling correctly. And what they are waiting for, they are waiting for the US job data as they come. So whatever be the output, an Indian investor is actually bothered about what would be the Nifty levels, what could be the best case scenario or the worst case scenario in the Nifty level, or how it would unwind, and what we should do or anticipate as the market unfolds. So therefore, the objective of this video is to make you prepared mentally and also technically in terms of how to view the data of the Nifty, what are the stocks we are looking at in the coming week that might provide some traction. However, if there's a broader bloodbath into the markets, then whatever the good stocks you might see, even fundamentally or technically, might also feel the dulge of it. So having said that, we are wasting much of the time. We will go with this, we will go with the technical analysis as we analyze the Nifty. So here, as we see, this is the Nifty chart, and here we have seen that this long red candle over here is the fall that had happened on the 6th of September 2024. And there have been, like you can see, across all the stocks, primarily into the broader indices, have seen a fall. But now, how as a technical analyst we look into it, and how you as an investor should look into it, we need to drill down into some of the data and then see what could be the best or the worst case scenario as we anticipate the US jobless claims data coming in the coming week. So therefore, we'll just put all the parameters here and then see where the levels are. So here, if we see the Nifty currently, it had gone to the high of around say 25,333 approximate, to 25,000 TSL level had been 25,235, and from there we have seen it falling and closing at around 24,852. So now this fall, if we see here, or I can say single day fall, had been around 1%. But if we see the maximum drawdown from the highest to the lowest on the last trading day, had been around 1.5% approximately. Now this is the one thing. Now if you see it as a standalone, it is not the one time. We have seen in the last 1 month or 2 months, every week the jobless claims go up and the things are not good in the US. We see selling happening in India and the global market. So provided if your broader asset allocation is in sync and you are not over invested into the equities or not into the greed psychosis, then you don't need to be worried about it. The thing you need to be worried about it, okay, if the market is falling, how should I be placing my cash? How should I be taking positions? Some very good stocks would be available, and how to thread that. And at a broader level, where we see the Nifty 50. So here, if we see the graph, here, if you see moving average, convergence, divergence, that is the second part of the graph here, it has already given a red signal. So technically, if we see that, it has already given a sell signal here. In this case, the EMA, exponential moving average, and the moving average crossover has not yet happened. So therefore, if you ask me, there is only one signal that has collaborated, or you can say that has testified that the market would be falling, but it has to be substantiated by the other factors. That could be, say for example, EM and MA crossover that has not yet happened. For it to actually further fall down, unless and until it does not fall below 0.61 to a certain extent, and substantially 0.5 Fibonacci levels. If 0.5 Fibonacci levels ko ye break karta hai, then there will be a very great fall happening. However, we don't anticipate that. Secondly, the broader support level as we look into it would be 24,591 as we see it, or you can see, say for example here, 0.5 Fibonacci level. 24,481 should be the this one. 24,624.40 should be the broader support level as we anticipate if it sees the free fall happening. However, the jobless claim data is not going to come on Monday. It would be approximately around Wednesday in the coming week when we can anticipate that. So therefore, we might still see some correction happening Monday or Tuesday if some good news are not there. But however, if they are there, then we can still see an upside. Now, what you are seeing here is a daily graph. So there are a couple of things you need to be ascertain about. First and foremost, there is only one signal that has given a sell, and the sell confirmation has not happened yet. Unless and until it does not fall before this, which is also one of the support level, but not that stronger a support level. The main strong support level is 0.61 Fibonacci level, that is 24,480. Having said that, even the parabolic SAR is still showing bullish, not the fall. Any negative opening or negative on the Monday might trigger the parabolic SAR. So then you will be having the two signals giving it. If you say percentage R, it is already the lower end of the spectrum. It is also going down, so it's also showing strengths being less, but still not so far so good. No, not that much to be worried, unless until we don't see further fall happening in the market. Now, if you try to see it on a before we go on the weekly part, I would like to show you some historical trend, because when you are analyzing a stock, you should also see how the same index or the stock has acted at a different time frames. Whenever there has been a drawdown, how it has got up and how it had been. So if you see here in the month of June itself, we have seen here it say falling from maximum 9%, 6.2%. So if I say previous day close, so it was around 5.88% club. But then again from the next day onwards, if you see that, we have seen here going up. So here we have seen it going up. So if we see this, you see this it going up. So here in this case, this was the first big, this was the second big, and then you see it's going up. Similarly, if you see here, it has gone down and then it has gone up. It has gone down and then it has gone up. So if we see these as the parameter, and if we see in the recent past, say for example here, this is around 1st of August, just a month back, it had fallen by around 4%. The market has gone down by around 4%, and then from there it has again got up. How much had been the recovery from there? The recovery had been phenomenally 5.63%. If you see together as on 6th closing is already 3.61%. So therefore, if you think that the world is coming to an end, it is not coming to an end. So therefore, if you are worried that everything is crashing down, I should bail out, no, it is not. Again, the matter of the fact is that you have to go the stocks specific story. You don't have to go the broader index story. If you are an index investor, then you might be worried because there might be some sectors which might be impacting. You will be having lower than expected efficient returns, because then you are going into the index investing for that matter. So this is the one thing. Now, while you see this, you're looking at the days graph. But then you don't invest into the stock market on day basis. You look at certain duration. So even if I don't go on a monthly duration, but let me go at the weekly duration, and then to see the how the graph is doing, and whether the selling signals are really too worried about for that matter. Now, if you see here, we have taken a weekly graph, and every candle depicts 1 week. Now, this week had been quite a red, not only for Indian Nifty, but also for the broader global market because of the obvious US claims data. If you see on the weekly graph, we have not seen the sell signal happening yet. Here it is again still showing the bullish upper trend. So technically, and even if I do this, if I draw the Fibonacci level just to see from the lowest this to this how it goes, and then see this, do this. Okay. So here, even if I will see this as a level, it is still at 0.786 Fibonacci level. It has closed around that figure, rather a bit a nanometer above it. However, it has still not breached 0.618 level. Had it breached 0.618 level, then we should have been technically worried about it, because then it would have sought for the lower support levels for that matter. So having said that, even on the weekly, if you see that, we don't see any concern happening. But even if you see here, it has fallen, then gone back. So matter of the fact is, yes, Nifty might see it, but then you also have to see which are the stocks that are overvalued. There are many stocks which are still in the buying range, still value, still okay to buy and hold. So therefore, you should not vouch for sector specific or an index specific investments, but rather should go for a stock up investing for that matter. So this is one thing. Now second thing comes at what levels we technically should anticipate if the market falls, for that matter. So firstly, from Monday to Wednesday, there will be quite volatility into the market because any good or bad news can swing the markets either way. So therefore, we need to be quite cautious about it. And if we see levels, the first support level we are looking at around the Fibonacci level of 0.618, which is 24,644.8. And if it breaches, then the second level would be 0.5 Fibonacci of 24,506.5 for that matter. So this is one thing. So with this, we have technically seen that this is not the first time it is happening. Even in this year itself, there have been multitude of the times when the market has fallen. So here, if you see, we are in the May. It has gone down by around 3.65%. Then we are in the month of June. It has gone down by around 6%. Then we have this, again 3%. So this was around in the month of July. So if you see every month it has gone, and rather it has been in the early week of the month where we have seen the drop down correction happening. So therefore, technically, if you are investing, you should rather invest in the second week of every month for a layman investor to get into, just because if you just see this trend happening. Obviously, it is not that sure, but if we see in the last 2 or 3 months, we are seeing that every month in the starting week, we are seeing some volatility in the market, obviously being driven by the US jobless claim data or some other event parameters that happen. So this is one thing. Second thing that comes key, okay, now these are the years. So what are the stocks that might see some momentum happening in the coming week? So here we are looking at a couple of scripts that we think and believe that if the broader market obviously supports it, we can see a good jump happening. So here one stock that we are monitoring is, and obviously none of this is a recommendation, but we have been observing and tracking the market. So these are a couple of stocks that have come in our notice that we would like to share with the general public for the general information and knowledge and trading purpose. So therefore, if you see here, we have been seeing Supreme Industries falling from around above 6,300 to around 4,799. Now here, if we see that it has made a broader support level at 0.618 Fibonacci, it has gone there and tried to retrace it. It went back, breaching the 0.5 Fibonacci level, 0.38 Fibonacci level, and now here, if we see that it has gone back to around 0.5. So it has closed around 0.5 levels. Now here, this shows that with 0.618 is one of the very stable levels, strong support levels. If we see here from the past stock levels for it, but yes, it has been supported by the moving average convergence divergence. It has also shown here the green candle. So if you see that here also is the green candle, so that means this is the first signal that we have got. This is the second signal we have got. This is also now showing the uppercut. This is also showing an uppercut. So this is the third time the confirmation signal has gone up. Now, the beauty of it is, while this red is the 200-day moving average, while this red line is the 200-day moving average, this blue line is a 50-day moving average. But now what here we are doing is the stock that stock actually tried to touch its 50-day moving average. The average price of the stock over the last 50 days before it got corrected and all averaged out, it was around you can say 5,493. It tried touching that and then it corrected because obviously the broader market itself corrected, so it's also went down. So having said that, if the things open Monday and Tuesday hunky dory and okay, we can still see the first target level of around Fibonacci level 0.3, which happens to be around 5,414 approximate, with the second level being 5,227 being touched. So in the short term, if everything goes well, this is one of the good stocks that we look into based on technical parameters primarily. The second we had seen is JSW Energy, but not quite that much you can say predictable, having much volatility, had been more or less range bound, not technically, but in the recent part it has started showing some of the upswing happening, but can go much on the, you can say, an oscillatory phase. You can say if something good on the energy field or energy sector comes up, then we might see some swing happening, but this is one you can just keep off the radar, but not depend too much, not to depend too much on the same. Now here if we see the Philatex, in the Philatex we have seen that it tried to of this regression channel, it tried to go up, but because obviously the broader market had been down, it went down. But if while we see that the broader trend had been downward, so if you see from here, the broader trend had been downwards, it had been only from the June it started reversing its trend, and it has been making the higher lows. The subsequent low has been higher than the previous low, so therefore we are saying that okay, it might go and surge up. Now while from June to September it has substantially shown that it is going up, like rather if you see here, it went down, it went up, then down, and it had been a downward channel. Now here it has been sustainably going upward as yet. However, here it had actually gone above 0.382 levels, and but then closed at 0.5 Fibonacci level, being one of the very strong support levels if we see. So if again the broader levels suggest or support it, we might see something good happening. If we see Fisher as a parameter, here the crossover is just touching it. So if market sustains it, we might see here positive swing, here positive swing happening. So here as of now there is only one thing that is in favor, that is the Fibonacci and the parabolic SAR. The crossover that had happened earlier between the EM and MA is not giving correct figures because it's too much swings or volatility happening. So therefore it is not translating too much into the correct figures, because it takes certain number of days, like 12-15 is the parameter that has been taken. So because it is swinging too much, so it's not giving the correct figure for that matter. So therefore with parabolic SAR and with Fisher 9 we are, and Fibonacci, we are still seeing it going up in the recent future if everything goes well. Then a couple of stocks we have been like Ather and all, so you won't be seeing seeing some good stocks into it. Bigger names, primarily these are the stocks which are around $10 billion to 50 billion of the market capitalization, as you see here. Now here if you see one of the stocks, let me show you, and not this one, this if you see here, if you see this stock, what is the beauty of this stock is this has just touched the 50-day moving average. So it is catching up with the 50-day moving average. There has been a range breakout as we have seen, but not fully. It broke approximately, it touched here, but the recent highs that it was happening, it has not done it. If it does it on Monday, then we can see swing up happening here. So let me, if I close this up, now here this is a positive, level. So here we are not worried about all these three parameters. We will go here. Now here we are seeing a stock which has gone corrected quite less, and is around 30s. Its P ratio is around 28, and if we put the Fibonacci levels here, okay, so if we see the Fibonacci levels here, we will see that the stock had closed around above 0.618 Fibonacci level. So therefore we are seeing, and it has already tested 50-day moving average. So around it was around at an average price of its past 50-day moving average. That shows the short-term growth up. Now there are two ways to it. If you see from the Dawes theory, normally there are three trends. One is the long-term trend. Long-term trend means if it is falling, it will keep on falling, and then there is a short-term trend or medium-term trend. And one of the trend is that even if you see a swing up happening, it might be just there has been sell-off, and then obviously there has been a buy that happens automatically for the people who enter into, and then it continues the fall. But having said that, when you are looking into from the technical perspective, here we are not looking at the long-term buy story. Here we're looking at okay, this is a stock which is running into you can say a range bound, and at a shorter tenure it has already showing some swing up happening, and we might see it breaking the range and making money for all. So that is what we are looking at. And one more thing, when you are looking at such transactions, it is all the discipline that takes, and the discipline is not about just key I have to be disciplined about the way I trade. It has also to be disciplined your greed or your fear factor. That is what you need to train your mind on. So discipline is not about your process of doing it, but it is the disciplining of your expectation of greed and fear and when to come out of it. Now, if you see that, if this stock breaks the range, now here if you see that, if I consider this as the range, once it breaks it, it gives a good flip side above. Yahan pe if it breaks the range, it gives a good flip side above. Now what our objective here is, if the market supports and the broader macroeconomic trends and the news are not wrong and the things go hunky-dory, and if some good news has, we can see a swing up happening. It has already tried and tested a 50-day moving average. We consider and we expect it to touch its first price level being around 1014.7 for that matter in next couple of days, with the second set of price being around 1036.20 as we see this. So this is all I would like to say in the current scenario. So we have seen here how the Nifty had performed in the recent past, how in the last 3 months, 4 months, every month in the first week, the Nifty has corrected by 3.5%, 4%, even as high as 6.5%. But then again, it went up, primarily driven by the fear psychosis of the US jobless claim data for that matter. And one time it was due to the yen trade that had happened. So every time it had gone back. The matter of fact is, if you're having your asset allocation right, if you're having your allocation to stocks right, if you're doing your profit booking regularly, then you're not stuck with the good stock for a long time in a loss positions. You would have made your money, you have parked your funds into the bonds of the gold, and you would have moved ahead to the next stock for that matter. So therefore, the point is, when you're looking at the news, you are looking at the news in the isolation. You don't have to look news in isolation. You have to look at news. Okay, the news has come, US job claims data has creating pressure in the global and Indian markets. So what had been the last 6 months? What has been the last 8 months? How the market has responded? How Indian market has responded? So which sectors am I exposed to? My portfolio is exposed to. Then how do I cover that up? So all those things have to, if you play your game well, then you don't need to be worried about. Yes, if you need money next month or a year from now and you are investing in equity, then obviously you should be worried about. Then you are already erroneous on a very first fundamental scale itself. You have not done your risk management or capital allocation quite prudently. So having said that, we have seen that there are some of the stocks which can still provide very good value proposition. We have seen the last week Bajaj Finance had given good returns. We had seen Dalmia Bharat giving good returns. We have seen Jai Balaji given exceptionally 15% performance approximately. Having said that, even in the falling market. So therefore, my take is, it is the stock to stock story that goes up. But yes, be knowledgeable about how the markets pan out, how your portfolio is structured, and then take your positions. Thank you so much. This is Rajat signing off. Thank you.